Foreign direct investment inflows to Nigeria dropped to $65 million as at the end of the fourth quarter of 2020 from $780 million recorded in the third quarter. This is according to the Central Bank of Nigeria's economic report in the fourth quarter. The drop in the FDI is relative as both equities and reinvested earnings declined during the review period, occasioned by the lingering insecurity challenges and uncertainty surrounding the second wave of COVID-19 pandemic. The report states that foreign capital inflows improved during the review period, driven largely by inflows for the purchase of money and market instruments, signifying renewed confidence in Nigeria's money market. As a result of this development, the net liability incurred during the review period increased to $1.78 billion relative to $330 million in the third quarter of 2020. This was as a result of a boost in portfolio inflows, particularly for the purchase of short-term money market instruments. The total states and federal capital territories' domestic debt profile hits 4.2 trillion naira, with Lagos State accounting for 12.15% of the debt stock as of the end of 2020. According to the report, the National Bureau of Statistics, Jigawa State had the least debt stock in its category with a contribution of 0.74%. According to the report, Nigeria's states and federal debt stocks data as of December 31st, 2020 reflected that the country's total public debt portfolio stood at 32.92 trillion naira. Further disaggregation of Nigeria's foreign debt shows that $17.93 billion of debt was multilateral, $4.06 billion was bilateral from the AFD, Exim Bank of China, JICAD, India, and KFW, while $11.17 billion was commercial, which are Eurobonds and diaspora bonds, and $186.70 million as promissory notes. Well, Nigeria's external reserves increased by 0.07% on Wednesday, 24th of March 2021, to stand at $34.62 billion. This represents the fourth consecutive day increase, gaining a total of $206.4 million. That's from $34.42 billion recorded as of March 18, 2021 to $34.62 billion as of 24th March 2020. Nigeria's reserves had lost $957.26 million year to date before recording increases in the past 4 days, which indicates that the recent oil price rally is beginning to reflect in the country's foreign reserves. Experts say it is important for Nigeria that is the increased number to continue, as it helps the CBN stabilize the exchange rate. Now, the central bank stabilized exchange rate against other currencies and, of course, meet up with pent-up obligations due to the lockdown embarked on in 2020. As the Nigerian Stock Exchange recovers from its bearish trend on Monday, analysts are optimistic that the rebound in the foreign exchange reserves will have a significant positive impact on the stock market capitalization. Well, I'm not doing this alone as usual. I have joining me live in our Lagos studio is the head of retail investments at Chapel Hill, Denham, Mr. Ayodeji Ebo. Thank you very much for your time. I appreciate this. Yeah, it's great to really see you in the studio. It's been a while.
Yes.
All right. Let's start quickly with the issues of reserves and, the state of our reserves. We've seen it dwindling. It's been up and down, improving and up. What do you think is responsible for this up and down movements that we see with regards to our reserves?
Okay, thanks. I think if we look back and we want to dissect, we will look at what's the primary source for inflow into the reserves. We can all trace it to oil. Yes. So it's not diversified. So once there's any major shock to oil price, global oil prices, we see that major volatility in our external reserves. So yeah, you looked at, if you look at the average price, even this year, we've seen some improvements. I think it tanked about 2 days ago, but was almost approaching about $65, which is positive for Nigeria. Yeah. But we need to, if we want to achieve some form of stability, then we need to be able to diversify our dollar inflows. dollar inflows, I mean, we need to be able to look for what are those major other things that we can export, so that we don't always depend only on oil. And when you see what CBN has been trying to do is to see how they want to create some form of stability. Yeah. Yes, CBN is caught between the rock and the hard place in terms of trying to have a robust reserve and also trying to maintain stability in the exchange rate. We all know that Nigeria is import dependent, and when you look at the import element of even inflation rate, inflation is high, currently at 17.3%. It also has an impact. So we saw CBN, though, have reduced supply in the last few months. Yeah. Average activity or turnover in the high and E window is around about $66 million. Compared to, if you check the last 3 months last year, it was as high as $171 million. So that has reduced, but that's also, CBN is trying to see how they can manage that reserve such that doesn't deplete beyond a certain level. Yes, we feel that, yes, supply also needs to improve to provide confidence, but with the oil price also looking positive, we believe that will give even the CBN more buffer to see how they can increase supply to the market. Then I would like to also mention their effort on diaspora remittances. Yeah. So we've seen that based on the available information, that on a weekly basis it's increased to about $40 million. Which is also impressive. We know there's still more effort that will still need to go into that. So
it's like that's paying off, right?
Yes, it's paying off when you look at coming from like an average of $3 million. So definitely you can say it's really paying off based on available data. Yeah. So it's really paying off, but I know there's still a lot of efforts that still need to be, because when you look at the annual diaspora remittances, which has been estimated by over, I think, $21 billion. So the target is, even if it's like 50% of that comes through the official market, that will also create some form of stability and dollar liquidity for the financial system, both the bank as well as reduce pressure on the CBN.
The CBN is doing a lot when it comes to this, and it's a two-in-one question. Some will say, how well do you see them sustaining this strong defense for the greenback, that's for the naira? Then coming to the issue of crude oil price, which we talk about, and like it's a positive for us at the moment, looking at our benchmark and what we are getting. But don't forget, there could still be shortages, there could still be shocks. Look at what happened with the Suez Canal and the blockage and all of that. You can't overrule all of these things. So how well do you see us sustaining all of this strong defense for the naira?
No, I think even the CBN governor alluded to that at the last MPC meeting, that we need to diversify. So it's like when you talk about, even for portfolio managers, you have to diversify your revenue base. So if currently you still get about 90% of your FX from oil, so it means that if there's any shock tomorrow on oil price, then we'll go back to round zero. So I believe that the efforts that the fiscal authorities will also need to make is to identify some of the other items that we can increase in terms of crops, or how do we add value to some of these crops that or cash crops that we export. Because you see what's happening when you look at the PMS, we export crude oil, we import refined products, which increase the cost. When you look at landing costs, it increases the cost. But if we can refine it here, there will still be some form of savings. And like we're smiling that crude oil price is going up, we also know the impact. The issue of subsidy is still there. So it's the higher the crude oil price moves, the increase in terms of the quantum of subsidy that would have to be sorted. Yes, now there's still a lot of discussion around it, but we know that if we estimate, we've estimated about 1 trillion naira may be spent on subsidy if it's not removed this year. So it's really not easy for the CBN because of that one way of receiving FX. Believe that I think what the CBN was trying to do now is to see how through remittances, if that can improve, if that can improve, then it will reduce pressure, because we still have that gap when you check different markets. They are still, the markets are still segmented. So I know the effort is to see how that there can be a convergence and reduce the gap within the exchange rates.
That one is scary. Anytime we touch on deregulation, we're talking about approximately 129 billion every month.
Yes.
Do you know, it's alarming. Saying we consume more than 70 million liters a day. A lot needs to be done when it comes to that.
I think there's a lot that they need to look at. It's also based on there's the smuggling. So when government also looks at it from that angle, we'll look at that we are subsidizing for neighboring countries.
Big brothers.
But when you also look at it from the perspective of Nigerians, inflation is at 17.3%, food inflation is at 20%. So also trying to push that total cost now to Nigerians is also unbearable. So people are just trying to survive, and it's really a very tough time.
Indeed.
And I believe that I think based on the dialogue, we're able to reach a middle ground.
Honestly, I don't want us to stay on that, because to nearly make us move away from our discussion. We have electricity tariff increase to grapple with. We have the PMS price, all of that just all together. And you won't really blame government, because revenues are actually dropping. And that's clear. That's what we see at the moment. Now, let's look at some economic indicators. Yes, it's not too late to talk about the CBN meeting, and all that happened, the retention and all of that, because many thought there was going to be a shift also because of the inflation rate and all of that. Some thought that maybe a little bit of tweaking of that figure, but the central bank came out to say no, we'll just let it remain and see how things go. How did that come to you?
No, I think for us it's in line with our expectation, because we've always known that the CBN has a lot of other policies or other parameters that it can use to influence interest rates. So we saw even after the January meeting, we saw HOMO rate moved from 5%, that's the longer maturity, from 5 to 10.1%, without touching or without tweaking the MPR, that's the monetary policy rate. So for us, we're expecting that based on the interest rate environment has moved. We know we're not yet there, because when you also look at high inflation, but we know we are not expecting that interest rate would catch up with inflation. That would also have impact even on the corporates. Last year the corporates were able to raise close to 1 trillion from using corporate bonds and commercial paper, because interest rate was low. But we also know, because of high inflation, interest rate can't continue. It's not sustainable, because it will discourage savings. And when there's no savings, then there will be no investment. So we believe it's in line with the expectation, but you can also see that gradual shift from the voting. You see that about 3 of the members voted for a hike in interest rate. So we believe that what the MPC members will be looking at is, if we're able to see stronger growth in our Q1, that will give some form of comfort. But with despite the positive growth rate of 11% in Q4, you see unemployment rate at 33% in Q4. So it means that it's not inclusive. So when you have more people without jobs, and we're also trying to see how the issue of insecurity, because that has a lot of impact on investment. And if there's no investment, there can't be jobs. So it's really a very tough time.
Senior investment managers like you, I'm thinking, what kind of conversations are you having with clients at the moment with all of these challenges all around? How are they listening to you? I think that there's something that still keeps attracting them to Nigeria.
Yes, I think I'll look at the investment from 2 perspectives: the retail investors and also the major investors like foreign investors. So starting with the retail investors. So what we have been pitching is they need to increase their risk appetite. So you see investors, or most Nigerians, just leave their funds idle in their accounts. You need to look for investment, that has low risk. And that you can invest. So you have the likes of treasury bills, commercial paper, that gives you higher return than. So we are not saying you can beat inflation, but we're saying bridge the gap, because if you continue to leave that funds in your savings account and you are targeting something, there would always be that setback, because by the time you go and price that same product in the next 6 months, what you have saved will not be able to buy it. Therefore, for the foreign investors, I think it's really not a very interesting time trying to convince them, because they will also look at the insecurity in the country, because that will also affect in terms of even distribution, even if they set up. So it's really a very challenging time for both the retail investors and also the foreign investors.
Every day we come up, we see headlines, and today again we're able to read 32.92 trillion naira. That's our debt profile at the moment, both for the federal and subnational level put together. For states, we have 419, that's approximately 4.2 trillion, and all of this external debt, domestic debt. First, our level of debt. We've always had this argument that, yes, we're not getting to the threshold. We can still borrow. It depends on what we use these funds for. Now, you've seen this figure today. This is almost 3 times of our budget. When we look at last year's budget. Yeah. No, 2020, right? That's about 10. No, that's 13. We had one, this year's was 13. The last one was about 10. So it's like 3 times of our budget. How do you see this?
Yes, I think it calls for concern, and I know really also the government guys are also looking at this, because when you look at it, it's easier to look at it as a proportion of GDP. And most times when we try to compare ourselves to foreign countries that have debt to GDP of over 100, 200%. But we know that currently, when you look at our GDP, how productive it is, it's like you have assets. When you look at it like a company, the assets, are they yielding any return? So if the proportion in terms of the amount of return that you generate, which I'll use the asset as GDP, is not significant to pay back, then it's really going to call for concern. Yes, it's been watched. We've seen that the aggressiveness in terms of to borrow, but we also look at the support. When you look at based on last year and the ways and means, that's the support from the CBN, which as the government has also been relying on. By the time you also factor that into our debt level, because currently based on what the DMO, the DG has said, that they're trying to restructure it and discuss with the CBN. So by the time we also add that to our current debt level, that would also go up significantly. And when you estimate debt service to revenue, we're projecting that it may be around 66% this year. So it means that for every 1 naira we make, we first pay service debt with about 66 kobo. So we now have our 44 kobo. We're not talking about other recurrent, non-debt recurrent expenditure. So we know that it's really a tough time. So the effort is to see how can we improve productivity, so that, because once productivity improves, the non-tax revenue will also increase. But how can we achieve that if we don't? We need to take care of the security issues that we have, so that businesses can thrive. Then we look at, before we now begin to look at how can we even make those businesses competitive and support them, so that rather than subsidizing consumption, we may start to subsidize in one way or the other production. Yeah.
Sometimes when I look at all of these challenges we face, I'm tense and I'm forced to ask, how well do we now see our economic sustainability plan playing out with all of these projections and reprojections that we are having? All of these beautiful documents that we have to work with as a country, and we expect that, yes, it will help achieve that inclusive growth, which you also mentioned. What are you seeing moving on in 2021 with all of these challenges from all angles?
Yes, I think what government will need to focus on is the stakeholders needs to come together to see, first of all, how can we begin to manage the issue of insecurity?
True.
Because when you look at, we spoke about food inflation at 20. So beyond the major factor that you may want to attribute to that would be insecurity. Even now, this is seasons where planting should be going on, but if you're unable to plant, then what do we harvest? So it means prices may still continue to go up, despite the opening up of even the border that should reduce that pressure. So if we need to first take care of that and try to see how we want to improve on our security architecture. So once that is done, we'll begin to see investment. Then we'll look at other policies, our trade policy, the FX policy. Most of those things will be reviewed. And we always talk about yes, we have the market, but if those companies are not able to set up in Nigeria, then we'll see, despite even the Africa Free Continental Trade Zone agreement, even with that, if we won't be able to really take advantage of the opportunity if we don't, we'll just see most companies trying to set up outside the country and they're just exporting to us rather than coming near. Most producers or most companies wants to be closer to their market. We call it proximity to market. But once there's insecurity, double taxes, there are a lot of issues that once government is able to tackle that and create more enabling environment, then we'll begin to see more growth. Especially, we know how Nigeria is structured. The small, medium-scale enterprises drive the trade sector, drive the manufacturing sector. They are the one that needs those supports, and they will be able to create more jobs. And once they create more jobs, they also increase the demand. And you see how once there's more demand, then you see more, most of those companies will be able to expand and they'll be able to employ more.
This advice looks like it's for the fiscal side, right? Because, we've already talked about the monetary side, but I would also like to say this, that many, back to what we're saying, we're talking about the CBN defending the Naira, intervening here and there. Some say they even have a lot to grapple with. That maybe the central bank should just stay with stability of the currency and just, let the fiscal side address some of these other challenges. Do you think the CBN is overwhelmed?
No, the CBN is doing a lot, but they are also limited. But when you look at if not for some of the intervention funds that have come in, government don't have that much capacity. So we also need that support now. It's not only just in Nigeria that you see central banks supporting. Even when you look at the quantum of what the monetary policy has done, is really very small compared to
4%.
About 4% compared to what you have in other climes.
That's true.
So that intervention is needed. I know over time is to ensure that we begin to see that efficiency, that in terms of the productivity. Yes, we're seeing it when you look at the agri space. We see crop production improving. So some of the CBN has identified some major crops items that they're trying to focus on, so that we all talked about diversifying the FX rate. So if we can export, so I believe that the CBN still we still need the CBN to support and provide those interventions even at this time, pending when the fiscal authorities are able to meet, take care of, handle the security issues in the country, and we can begin to see FDIs coming on their own, FPIs coming on their own, and that would also improve the overall system in the
very interesting way to live it. But before I go, I just wanted to ask, now it's just a straight question. If you had to look at next inflation figures, what do you think could be? What figures do you think we could be having?
I believe that it would almost touch, it would be around 18%. Yeah, so it's around 18% that we're projecting for inflation.
By mid-year, do you see any drop? Do you see it drop in any form?
Yeah, so mid-year, what is giving a bit of comfort is the high base effect. Last year it was really high, so the high base effect. But there are a lot of downside risk. You spoke earlier about the electricity tariff. We're trying to move towards a cost reflective. We don't know what will be the outcome of the PMS. So, and we also food inflation. Do we see that coming down now? Depending on, because there are also there's the import element, there's also the structural issues around food inflation. So there are a lot of downside risks that may keep inflation up, but we're hoping that with that base effect, then the rates of increase may also be minimized.
Brilliant submission there. You've heard Mr. Ayode Ijebu is the head of retail investments at Chapel Hill, Den Haag. Thank you very much. I appreciate you. It's always great having you on the show.